Welcome back to the channel. Glad to see you're here. Woo! Great weekend. Hope you guys are enjoying your weekend. Just want to say a couple things. Smash the like button, hit the subscribe button, and make sure you put on your post notifications. Before I start, I had another video planned, and I just, guess what? Tossed the contents of my notes, tossed them right in the garbage because I found something that was way more important. Actually, I didn't find something that was way more important. It was just the fact that this idea came up, and this is way more important. What I'm going to be talking about is why traders fail. And the percentage is between 80 to 90%. I think more on the 90% side of the scale. Why traders fail. Now, one of the reasons why traders fail is because they don't understand how the markets work. They understand timing of the market. They don't understand positioning, proper positioning of your contracts, and they don't understand how the win-loss ratios work. But the bigger picture, in the bigger sense, traders fail because they don't have a clue of how money works. Now, I'm going to make this very simple. Whether you're winning or you're losing, at the end, if you're not profitable at the end of the day, if you're not profitable at the end of the month, if you're not profitable at the end of the quarter, means you're not going to be profitable at the end of the year. So if you start with X amount of dollars, and at the end of the year, you're here, you're not profitable. Year 2, you start here, you finish here, you're not profitable. Year 3, you start here, you finish there, you're not profitable. Between January to December, you've incurred a lot of commissions, which takes down your P&L. Now, one of the things that new traders are having a hard time to understand and they're battling with is something called consistency. And this is where this really excites me. The problem is that I see so many traders out there making successful trades. However, they're not consistent. And that's what kills you off the break. It's consistency. And a lot of traders are posting very big days, but you never see the losses. And that's where social media comes into play. You see the big days. I made X amount of money this day. This is a great day, but you never see them post the losses. So what happens is people are seeing that, oh, I can do this. I can jump in. It's just real easy. Let me tell you one thing. If you don't take any information from me throughout this whole entire session, there's one thing that you're going to learn, and that is there is no such thing as easy money. Simple like that. There's no such thing as easy money, especially on Wall Street, because there's so much going on. You have algos, you have high frequency traders, you have so many people competing for nickels, dimes, quarters, and pennies. All the way up to the hedge funds with billions of dollars of assets under management. And sometimes you got people that don't play fair. You have people that have the inside knowledge, and there's a whole lot in between that. But in order for you to be a successful trader, you have to have some of the groundwork and some simple understanding, meaning that decide which side of the market you're going to play. Are you going to be a short-term trader or are you going to be a long-term trader? If you're going to be, I think everyone more likely, if you're in the game, you're in it for the long haul. You don't. If you're not in it for the long haul and you're in it for these short profits, the market's going to eat you alive in the beginning, and you won't even have any money left for vacation. It's going to be over. There's no vacation. And traders have this idea, of a fantasy of, hey, this is going to be great. It's going to be so easy. But you know what? It's going to be the hardest thing in the world. And another reason why a lot of traders fail is because they quit, and they quit too early. 6 months, a year into the game, and they're already done. And the reason why they quit is because they run out of capital. It takes a lot of money. You got to blow through a lot of money. I'm talking about a lot of money before you start learning. And some people don't learn at all. So some helpful advice: get a mentor, take a course, learn from someone that knows what they're doing. That's how I learned. I had to learn from somebody that knows what they're doing. And you have to understand that it's going to be It's going to be a struggle, and it's going to be hard, and it's going to be a challenge like you don't even understand. But you know what? You're going to have those big days where it's going to pay off, and you're like, wow, this is what I like. This is why I got into it. And one of the principles that I look at as far as success principles in the market, Warren Buffett. Everybody knows the simple Warren Buffett. And the simple Warren Buffett phrase that he always says for success, don't lose money. It's just that simple. You start with A, you finish down there, you're losing money. You can't do that. It doesn't make sense. You're not going to have any longevity. The name of the game is longevity. The name of the game is live to trade another day. Have a little bit left over so you can trade for the next day. Otherwise, it's a done deal. And the end goal is for you to build your account so that year over year you will have compound interest. And that's how the account is going to grow exponentially through the years through compound interest. But if you're making these, I call them cowboy trades here, left and right, doing these, taking every single tip that you can find, every message board, every little CNBC breaking news that comes out, and you're running behind all of these quote unquote quick trades, they're not going to last. What it's called is quick money. Of course you can make quick money here and there, but you're in it for the long haul. You're in it for sustainability. And what I tell people, and I ask them about their trading style, I said, you know what? Bill, Bob, Steve, why would I put my money behind you when I'm not seeing a consistent, profitable track record? You're just a guy that's in a corner trying to spin your wheels. You have no consistent track record. It doesn't work like that. So learn the task, take your time, understand how things work, understand that, hey, you know what, I'm behind the 8 ball, but I'm going to learn this, and it's going to take something called practice and a lot of repetition, a lot of losses. In fact, you're going to have more losses than you have wins, but you got to have bigger wins and small losses. That's how you're going to build across the board. Small loss, small loss, small loss. Win, 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 small loss. And that's how I was taught. That's how the guys that are consistent will stay consistent, because they cut their losses quick. You got to cut them quick. That's another thing. You're taking on, your losses are too large. Anytime your losses are more than your gains, it's simple math. You're never going to win. You're never ever going to win. And one of the reasons why a lot of new guys fail is because these guys are getting emotional in your trades. You got to leave that at the front door. If you're having a bad day, you shouldn't be trading. If you broke up with your girlfriend, you shouldn't be trading. If you're playing around with money that's not discretionary income, you should not be trading. If you're trying to trade to pay your bills, you shouldn't be trading, because it's not discretionary income. And when you're in the trade, your body is releasing, and your brain is releasing chemicals, and those chemicals are trying to protect you, and your heart is racing, and you're not able to do what you need to do because you're not in a smooth, calm state of mind, and you're getting emotional in these trades, and then the trade is running away from you. You think it's going to come back, and guess what? 9 times out of 10, it's not going to come back. So a small loss can turn into a small loss can turn into an even larger loss. By the end of the day, you don't even know what happens, and it's down the drain. And don't take advice. Don't take advice from people that don't even know what they're doing. It makes no sense whatsoever. You're taking advice from people that don't know what they're doing. They don't have a track record. When I say track record, I'm talking about years behind the desk with probably a prop firm or a large institution, somebody that was taught the right way. That's who you take your advice from. That's who you want to mentor up with. Not every Joe Schmo that's trying to pump your program and push it down your throat. It doesn't work like that. So like I said, it's hard, it's challenging. Go for the long term. don't get discouraged and stick with it. Once again, Wall Street Bravado signing out. Hope you have a great week. Thanks. Click that subscribe button, thumbs up, post notifications. Have a great day.